This video is brought to you by togetherbudget.com. Investing is a way to grow your wealth over time by putting your money into assets that have a higher potential for return, such as stocks, real estate, or bonds. It's essential to understand that investing carries some level of risk, and it's crucial to diversify your portfolio to minimize loss. Determine how much you can afford to invest each month. Once you've established a solid financial foundation, it's time to explore different investment options. Consider consulting with a financial advisor or doing your own research to determine which assets align best with your goals and risk tolerance. Investing is not a one-time event, but rather an ongoing process that requires regular monitoring and adjustment. Stay informed about market trends, economic changes, and regulatory updates to make informed decisions and optimize your portfolio. When it comes to investing, there's a fundamental concept that every beginner needs to understand: risk versus reward. Imagine you're at a casino where you can either play it safe and win small amounts or take a chance on a big payout, but risk losing everything. Investing is similar. You put your money into assets like stocks, bonds, or real estate in hopes of earning more than what you initially invested. However, there's always a possibility that the value of your investment might decrease instead of increasing. Let's consider an example. Suppose you invest $1,000 in a stock that has the potential to earn 20% return. Sounds great, right? But what if the stock actually loses value and drops by 10%? You'd be left with only $900. The key here is understanding that risk and reward are not mutually exclusive, they're interconnected. As you take on more risk, your potential for higher returns increases. So, what's the best approach? It's about finding the right balance between risk and reward. This is where diversification comes in, spreading your investments across different asset classes to minimize potential loss. For instance, if you invest in a mix of stocks, bonds, and real estate, you'll be less exposed to any one particular market downturn. Ultimately, investing is about making informed decisions based on your financial goals and risk tolerance. It's essential to educate yourself and develop a clear understanding of the investment landscape before putting your money on the line. By doing so, you'll be better equipped to navigate the ups and downs of the market and make smart choices that align with your objectives. Conservative investors prioritize capital preservation and typically opt for lower-risk investments such as bonds, money market funds, and dividend-paying stocks. This approach is suitable for those nearing retirement or who cannot afford significant losses. Conservative investors often have a shorter time horizon and are more risk-averse. Investing without a solid plan is like navigating through uncharted waters. Without a clear strategy, investors often find themselves lost and unable to make informed decisions. When it comes to investing, there are many options available, but for beginners, starting small and taking calculated risks is key. Robo-advisors like Betterment or Wealthfront offer diversified portfolios and low fees, making them an attractive choice. Online brokerages such as Fidelity or Vanguard provide a range of investment products and tools for self-directed investors. Robo-advisors use algorithms to automatically manage and adjust investment portfolios, providing a hands-off approach. They often offer low fees and require minimal initial deposits. Some popular robo-advisors include Schwab Intelligent Portfolios or STAT. Online brokerages offer a wide range of investment products, including stocks, bonds, ETFs, and mutual funds. They provide tools for self-directed investors to research, analyze, and execute trades. Some popular online brokerages include Robinhood or eToro. As a beginner, it's essential to understand the fees associated with investment apps and platforms. Look for low-cost options or those that offer free trials. Some popular low-fee robo-advisors include Acorns or Digit.